Tuesday, July 16th, 2019, Maneco 64, home of alternative economics and contrarian views. Billy, being a silver bug, is very interested in this video today, as we're seeing silver maybe finally starting to wake up. One day's move doesn't make a trend, of course. Yesterday, silver did very well, and today it's doing well again. The gold-silver ratio is dropping. Today, I also want to talk about iron ore and how the price of iron ore has almost doubled. It's up about 95% since the low last year, and I'll talk about what iron ore is used for and how important it is, and I'll look at an article about China and iron ore and the FT, so we can see, try to understand what's really going on. So yeah, this morning I'll focus on looking at the markets, what they're doing right now. It's a little later than usual. It's about 8:38 a.m. London time. And then I'll look at some charts to do with the gold-silver ratio, iron ore, and the article I was talking about. Spot gold is at 14.1360, down $0.50. Range has been 14.11 to 18.64. Silver right now is up 5 cents, continuing to do fairly well. It's at 15.42. Range has been 15.31 to 15.47. The stock market, the Dow future is down 11 points, 27,343. So nominally lower. S&P is unchanged, just above 3,000. The NASDAQ 100 future is up a couple of points, 79.67. Currencies, fiat currencies that is, we've got the pound down below 125 now. We're down 0.25% at 124.84. So our local currency here in the UK continues to sink, like all the fiat currencies will eventually do. But the pound looks to be sinking a little quicker these days. The euro is down nominally, so 112.50 against the dollar. And the dollar is up 0.16% against the yen, 108.80. Dollar is up 0.04% against the Chinese yuan at 687.54. Crude oil. WTI is back below 60. It's at 59.54. Brent, 66.11. They're both unchanged, actually, those oil contracts. What about the bond market? Yeah, the yield in the 10-year dropped yesterday. So we're just under 210. We're at 209.6, the 10-year yield. So that has dropped a little bit. We have seen a gain in the last week or two from below 2% to around 212, 213 recently. The 3-month is at 216. So yeah, the curve has inverted a little. It was looking like it was going to disinvert. So now we're about 6 basis points inverted. I think it got to almost flat, so to speak, a few days ago. So let's look at silver. I have said in the past, and many people as well, a lot of people who follow precious metals know, as Jim Sinclair says, and he said in his interview with Greg Hunter a week or so ago, that when there is a bull market in precious metals, silver is like gold on steroids. And even though we have seen gold do very well in the last month, the breakout of a key level of 1375, 1380 in June, we haven't, the equivalent level for silver should have been around $21, but silver is still languishing with a 15 handle. We know that the gold-silver ratio, which is basically the price of gold and silver, is continuing to rise. So you're needing more and more ounces of silver to buy gold. And we know that in a bull market for precious metals, that ratio actually drops as silver outperforms. Historically, that ratio going back centuries it should be around 16, 15 to 1. In the ground, I think the ratio is more like 10 to 1. In the ground, I mean, for every ounce of gold that you find 10 ounces of silver. That's what has been the historical norm. So the fact that we are above 90 is very high. So let's look at some charts. First of all, short-term charts. So you can see here, this is a 15-minute chart. So this is going back to like the 11th of July. You can see how this ratio has dropped over the last couple of days from 92.20 all the way to 91.60. But more importantly, from around 93 just a couple of days ago. Daily chart, you can see there that the gold-silver ratio topped just below 93.5. And yeah, the last couple of days, we're continuing to see silver outperform, but we're still a long way away from a key level, which was 80 in the gold-silver ratio. And I'll show you why through this monthly chart going back to the early 90s. You can see here in 2003, there's a top around 80. 2008, there's a top at just below 80. And more recently in 2016, it had topped around 83. So the fact that we went back up above 80 here recently was a big thing. So monthly, it's still looking bullish, but it's starting to make a move. Gold-silver ratio looking very interesting. The fact that silver is starting to outperform, even though silver could move a lot more. Historically, we can see silver move over $1 in a day. So 15, 20 cents isn't that much, but it's a start. What about iron ore? So first of all, I want to look at iron ore on Wikipedia and what Wikipedia says about iron. So iron is the world's most commonly used metal. Steel, of which iron ore is the key ingredient, representing almost 95% of all metal used per year. It is used primarily in structural engineering applications and in maritime purposes, automobiles, and general industrial applications. So it's very important metal. Steel and iron ore, of course, is what steel is mostly made of, steel being an alloy. So I'll show you the chart of iron ore because iron ore is now traded as a future. And this is quite recent, only in the last few years. And this is a daily chart. Iron ore bottomed last year around $430. And right now we are at $840 or thereabouts. Yesterday we went above 850, but it's gone up almost 100% since the low last year, 430 to 840. It's almost doubling. It's up 95%. So is there something going on in the iron ore market that is making this happen, making the price go up? Yes, there is an interesting article here in the FT. This is from July 5th, 2019, and it says China cracks down with probe into iron ore price increases. These price increases have been, ongoing for the last year, I would say. And if you look also at the a bit longer term prices of iron ore, if you go back to the end of 2015 when gold and silver bottom, iron ore was below 300 here. So it's gone up quite a bit as well. This is not just recent. I know the Chinese are investigating, but this has been going on for a while. And in my opinion, it could be a signal. What could it be a signal of, even though we're getting a lot of indicators of recession worldwide? Well, it could be a signal that people are losing confidence in paper assets. Because what's more tangible industrially than iron ore and steel, right? So this is This is an interesting indicator. It's something that I hadn't looked at before. I saw an article give King World News credit a few weeks ago about iron ore, so you can see how it's been a massive increase. There are things that have happened in the market here, and I'll read about it in the FT that have probably helped the price. But as you can see, in the last 3.5 years, iron ore has been on upward trend. There has been ups and downs, but it's more than more than doubled. It's almost tripled. So it says here in the FT, China is investigating the cause of a steep rise in imported iron ore prices in an effort to crack down on abnormal behavior, an industry official said on Friday, causing prices for the steelmaking ingredient to tumble. Now it's picking back up, right? It says, Shu Li, the deputy chair of China's Iron and Steel Association, told a conference in Shanghai on Friday that relevant departments were looking into the recent jump in prices, according to Chinese state media reports. The drop in steel prices and the rise in iron ore prices have meant that the level of Chinese steel company profits has continuously declined and become hard for companies to digest, Ms. Xu said. I think that's how you pronounce QU in Chinese. China is the world's largest steel producer, and news of the probe sent iron ore prices in China down 4% and also hit shares of the world's largest miners, Rio Tinto and BHP Billiton. Prices for iron ore surged to a 5-year high of more than $126 a ton this week amid a recovery in Chinese steel demand and lower supply from Brazil and Australia. On Friday, they fell to $114 a ton, according to Platts. So this is one of the reasons why iron has been rising as well, outside, the supply and demand dynamics, and maybe also outside what I said, that maybe iron ore is pointing to loss of confidence in paper assets and paper money. So it says here, Paul Gate, an analyst at Bernstein, estimated that global iron ore production fell by 17% in the first quarter from the previous quarter to 273 million tons due to the impact of a deadly dam collapse in Brazil and tropical cyclones in Australia. The collapse of a waste dam at mining company Vale's Corrego do Feijão iron ore mine in southeastern Brazil in January unleashed a wave of sludge that left more than 240 dead. So yeah, there are these events outside the supply and demand dynamics. But if you look at this chart here, I think there's something more going on with iron ore and steel. And it's interesting now that silver is starting to catch up. Could this be pointing to actually the world economy actually recovering? Or could it be a sign that people are losing faith in paper assets and running toward tangible assets? We'll have to see. But things are getting very interesting. We'll keep an eye on silver, iron ore as well, and everything else. If you enjoyed this video, make sure you hit the like button, subscribe to the channel if you haven't yet, and you can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.